Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, we are going to cover the major events currently impacting the markets, the key headlines that investors will be focusing on and trying to digest today, as well as try to understand some technical analysis and where prices might be headed for the day, as well as for the week. Once you join in, and let's say hi in the live comment section. Please will confirm that everything is working just fine. All right, so let's get started. There's quite a number of key headlines that are currently dominating the markets. And one of them came this morning. Japan surprisingly entered into recession. And this was quite a surprise in the markets. So as you all know, recession is defined as 2 consecutive quarters of economic contraction. So in the last quarter, the Japanese economy reported negative 0.1% economic weakness, and in the previous quarter, negative 0.8%. So Japan's GDP unexpectedly shrunk 0.1%. That was in quarter 4 of 2023, missing the forecast of 0.3% growth, following a revised 0.8% fall in the third quarter of last year. And this was from fresh economic data. So the economy fell into a recession for the first time in 5 years, as private consumption, which accounts for more than half of the economy, declined for the third consecutive quarter amid elevated cost pressure and lingering global headwinds. So that is a key highlight that investors are trying to process today, because when an economy goes into a recession, it means that businesses are reducing production and cutting on jobs. And when you see businesses reducing production, cutting jobs, that's usually a very bad indicator for the economy. So what happens when an economy goes into recession? So the most common thing that we see is a response from both the government and the central bank. So on the central bank side, we expect the government to maintain easy monetary policy. So easy monetary policy means injecting money into the system to support the businesses and perhaps even some form of deregulation, including tax incentives, to help the industries recover. And as they recover, then we see more jobs being created. And as a result, the economy gets out of a recession. So the expectations that the Bank of Japan would be hiking interest rates are now moving higher and now moving lower and getting deeper, because nobody hikes interest rates during a recession. So as a result, the overall expectation is going forward, we should be seeing the weaknesses happening in the Japanese yen currency. So this is the article from Trading Economics, and I'll be sharing this with you. So when you have some time, you can go through it. Hopefully, it will add some value to you. So there is the link. So good morning, Jason. J-Squad, good morning. A good question, what is causing the bullish pressure on Bitcoin? I'll be answering that shortly. So if you have any questions, relevant questions to the conversation, keep them coming. I'll be more than happy to respond to them. So that's one of the key headlines related to the markets. And as you can see from this chart, we have had a couple of negative quarters where Japanese economy was down negative 0.3. Then the following quarter, there was a recovery. Negative 0.4 recovery, negative 0.6 recovery, negative 0.1 recovery, growth for 3 consecutive quarters. Then in the last 2 quarters, it's a consecutive weakness. Negative 0.8 followed by negative 0.1 indicates a recession. And in that case, we might continue seeing the Bank of Japan holding rates at negative 0.1% and potentially increasing quantitative easing to support the economy. So as a result, I expect to see an increase in supply of Japanese yen, and this would potentially lead to a weakening of the Japanese yen. So following what we saw on Tuesday, where US CPI came in at 3.2%, much higher than the expected 2.9%, in the 34th consecutive month that the US inflation rate remained above 3%, then it basically means that there is a strong likelihood that the US has entered what we call a stagflation. So this is a period of time where inflation remains persistently high, and it requires magic or very key monetary policies to get out of. As a result, there is an overall expectation that interest rates in the US might remain higher for longer, and this led to a big spike in the dollar index. And then yesterday, the market tried pulling back downwards, managed to move down a bit, but still significantly high, especially considering that in the last couple of weeks, we have seen the dollar index move from a low of 100.85, and now it's trading at 104.552. So as a result, this means that the dollar is expected to remain significantly high, and this creates a very nice opportunity to continue enjoying bullish momentum on the USD JPY currency pair. So in this case, as we all know, from a technical perspective, we are seeing this trend line being held time and time again, and now the market is approaching the trend line yet again. So in this case, as the market approaches this trend line, our bet or expectation is that the dollar continues strengthening against the yen. So we will be looking for signs of reversal along this trend line and potentially trading higher from that point onwards. So in this case, there is a strong likelihood that the USD JPY will be bouncing from here, then moving on higher. So it has been a consistent trend. Market moves up, pulls back down for a couple of days. Once it gets to the trend line, rallies again, back to the same trend line, then back again, rallies all the way up, pulls back downwards, and I expect a continuation of the same as the fundamentals have not changed. So the idea is to look for evidence of bullish entry. So when you see buyers entering the market, that's the strike right there. That's the area you want to be buying this currency pair. So another news, I remember discussing earlier in the week about the potential strengthening of the GBP. And now this morning we had another set of bad news where the United Kingdom or Britain basically reported an economic contraction, and this led to an unexpected recession in the UK. So the British economy contracted 0.3% on the quarter in Q4 2023, following a 0.1% decline in Q3 and worse than market forecasts of a 0.1% fall. Preliminary estimates showed the economy entered recession amid a broad-based decline in output, namely in services, which came near negative 0.2%, the same as in Q3, particularly wholesale retail trade, negative 0.6%. Industrial production was down, negative 1%, versus an expectation of 0.1%. Mostly manufacture of machinery and equipment, which was down negative 7%, and construction negative 1.3%. So from the charts right here, you can see that there was a period when the UK economy was growing at 7.3% in the quarter. This dropped significantly to 1.7, 1.5, then 0.5, then 0.1, then we entered negative territory, negative 0.1%. Then some form of growth to 0.1%, then 0.3% before we went back to zero. So as you can see from this trend, it's a consistent weakening of the UK economy. In the previous quarter, it went down 0.1%. Then in the last quarter, Q4 of last year, it went down 0.3%. And now we have 2 consecutive quarters where the UK economy has been weakening, confirming that now the economy is in a recession. So as I've mentioned, whenever an economy is in a recession, you expect to purchase. So on one side, from the fiscal side, you want to see the government spending in excess. So you see more deficit spending to try and inject money into the system and stimulate economic activity, which includes demand as well as production. So on the fiscal side, we expect the Bank of England to now start considering cutting interest rates before the high interest rates continue hurting the economy further. So this is a key indicator that might pressure the Bank of England to cut interest rates. And once they cut interest rates, there will be easy money, and potentially, if things get worse, the Bank of England would consider printing more pounds as a result through a quantitative easing program that would allow the economy now to recover. So in this case, the bets on the UK economy cutting interest rates may have increased as a result of this news. So we could be seeing something changing fundamentally. So now with this in mind, the previous expectation that the pound would start strengthening against the dollar have now completely changed, and the thesis is now that the market may be headed much lower. So from the triangle that we were having here, extending all the way to November last year, it was recently broken, market made a recovery, and in this case, we expected to see the market move higher. But now it seems like a breakout, a retest, and a continuation. And in this case, I expect the market to move much lower, with targets being at this previous bottom, as well as this other previous bottom, which forms the basis of the triangle. So now the expectation is that the pound continues weakening against the dollar, potentially getting 1.4473. So from the 1 hour chart, this is how it looks like. So in the last 1 hour, there was a sudden drop. And now I expect that for the rest of the day, we should be seeing some much weaker pound against the dollar. And for any short-term intraday trader, then the target is much closer, because you could be expecting to see price literally just dropping to this previous low, which is 1.25188. Then the overall expectation that the market moves lower, gets to this other low of 1.25 and further downwards at 1.24473. So still on the economic calendar front, we can check some other expectations for the day. So on the economic calendar, we have already seen a majority of the news we're expecting for the week, including US CPI, which I had mistaken this to 3.2, it's 3.1%. So UK's CPI came in at 4%, meaning that annual inflation did not drop. It remained at the same level of 4%, despite analysts forecasting that inflation will be on the rise at 4.1%. So core CPI came in at 5.1%, similar to the previous number. So it also missed expectations. Then for forward prices, that is producer prices, for inputs, they were down negative 0.8%, and for outputs, down negative 0.2%, meaning that on the next month or the near-term period, you expect consumer prices to move down further. And this would be in line with the Bank of England's expectation, but still significantly higher than the target of 2%, which means that, yes, this perspective, rates might stay higher for longer, but now considering the recession and what it means for the UK economy, there could be a lot of political pressure to start cutting interest rates. So today, what we are seeing is a sequence of economic news. Also for Japan, we saw negative 0.1%. For Australia jobs data, we saw that the economy created 0.5K jobs, and this was much lower than the expectation of 26.4K jobs. And the previous number was even worse. So yes, there was an improvement, but the improvement is the expectation, leading to unemployment increasing 4.1%, up from 3.9% the previous time. So for UK GDP, it came in at negative 0.1%, missed the expectation of negative 0.2. And as you can see in the previous reading, we had seen 0.2% for the month. So over the quarter, down negative 0.3%, and the previous reading was negative 0.1%. Now we have confirmation of a recession. So going forward for the rest of the day, the most important news will be a speech from ECB President Lagarde. She is due to testify before the Committee on Economic and Monetary Affairs of the European Parliament in Brussels. And this will be happening, it's already happening. It was supposed to start at 11 a.m. So going forward, we should be looking to get a summary of what she presents and how that affects the markets. So the most important news for the day will be the US retail sales data, as well as the New York or Empire State Manufacturing Index. So retail sales basically represent a measure of the purchasing power of the US consumer. So if they are weakening, then it basically means that the consumer is weak. If they're strengthening, then the consumer is strong. So in the previous reading, there was an increase of 0.6%. And now we're expecting a drop to negative 0.2%. So these are key indicators for the Fed, showing how the US consumer is performing. So a strong retail sales report would basically indicate that the US consumer is strong, and that tends to be inflationary. And as a result, it may lead to the Fed holding rates higher for longer, which is positive for the dollar. So on the other hand, if retail sales weakens, that would be consistent with the Fed's expectations, and it might lead to a weakening dollar. So at the same time, we'll be looking at the manufacturing index for Empire State. So the previous reading was negative 43.7. In this case, we expect a further weakness of negative 13.7, but an improvement from the previous reading. But then, as long as manufacturing remains weak, then that should be a key indicator of weakening manufacturing across board, and that's consistent with the Fed. But then if there's some form of improvement, even higher than this, maybe get into the positive territory, then that would build a case for a very strong dollar. So at the same time, we'll also be looking at the unemployment claims. Unemployment claims reported still at 4:30 p.m. Previous reading was 218K. We expect this to slightly increase to 219K. So the more unemployment claims increase, it basically means that the job market is softening and might be consistent with the Fed's expectations. But then if it misses and unemployment claims continues going down, then it means a tight labor market, which is inflationary, and it's not consistent with the Fed. As a result, we expect the dollar to be quite stronger. So we also be looking at Philadelphia Fed Manufacturing Index. Previous reading was negative 10.6. We expect this to improve to negative 8.0. But then this is still on the negative territory, which basically means contraction. And as a result, it would mean that the manufacturing across board is weakening. So later on, we'll get industrial production data from the US, which increased by 0.1% in the previous reading. So we expect this to gain to 0.2%. And this would still be positive for the dollar if it happens, or even higher. And as we approach the end of the day, we'll be looking at three speeches. One from German Uber President Nagel at 9 p.m. The other one from FOMC member Waller at 9:15 p.m. And last one from Reserve Bank of New Zealand Governor Adrian Orr at 9:40 p.m. So that being the expectation for today. Now, if you look at the various charts across board, you'll notice some key trends happening. The dollar being really strong made a big impact here on Tuesday. And now the Euro USD has been making a recovery, but already this price level is being rejected here. So there's a good chance that we'll be seeing the dollar index now attempt to make a recovery after the big sharp increase. Pullback yesterday. Now you can see that the market is struggling to move back downwards. So there is a good chance that the market could be retesting this area here, which served as the high of last week. Now, once it retests this area, then potentially bouncing and moving higher. So if this happens to play out, then it would mean that even the other pairs in the market, let's say Euro USD retesting this area and then moving further back downwards. And for USD CAD, something similar. So dollar weakens against the Canadian dollar, and then at some point bounces and start strengthening again against the Canadian dollar. So as for gold, what we saw was a big drop downwards. So we had been waiting for this breakout for quite a period of time. And as it happened, this was during the news, CPI news. So there was an extension, price kept going downwards, including yesterday. Today we are seeing some form of recovery. So the idea is to look for signs that gold has exhausted its recovery. Once we see those signs, then perhaps in that case, we'll be considering looking for short selling positions. However, I could be wrong, and gold continues strengthening for the rest of the day. So if I'm wrong and it continues strengthening for the rest of the day, then we should be observing the most recent low as a nice target. But then if that doesn't happen, then gold continues the bearish momentum. So in this case, potential case, we gold moving up to 2011, which I think is unlikely, but if it happens, well and good. But then from the forward chart, I expect a continuation of this momentum towards our target, And remember, the breakout here, the target is that price of gold will drop the base of this pattern here. And this is around our price level of 1973. So it's very important that we observe this short-term trend line here, which marks the high of yesterday, pullback here from yesterday, the previous day. And now the market is retesting the same area again. So I think this is a decision time, which means that we observe what price action does around this area. So a clean break, we expect some recovery to this area here. But then if the break doesn't happen, then we continue trading downwards and target the previous level. So US equity indices have recovered the losses that we saw on Tuesday, as well as on Wednesday. On Monday and Tuesday. So what we saw on Wednesday is a very strong recovery. Today the recovery is continuing. So perhaps we will be seeing a full erasure of all the losses that we had seen earlier during the CPI news. So remember, this has been the trend, a pullback followed by a continuation, pullback, continuation. And I remember telling you guys on Monday that whenever you see such a reversal, your interest is to continue trading along the trend. So you don't want to be buying here. So when there's a pullback, that's when you want to buy. And now the market is making a recovery. So we could be seeing the market going for all-time highs as soon as tomorrow. And the target is around $18,000 per share of the NASDAQ. So for US30 or the Dow Jones, it's the same thing. Market was dropping, strong rejection of lower prices, and then we are seeing a reversal happening here. So I expect the market to continue pushing and perhaps make a full recovery towards the end of the day tomorrow. And it's the same thing for the S&P 500. So a big drop, market gets to the 200 moving average, breaks below it, and then gets right back immediately, retest this area, and then moves on higher. And now we are about to establish yet another all-time high. So my expectation for the day is that the price continues tracking towards this area, especially considering that nothing is changing fundamentally. So Brent oil prices have made a U-turn. So we expected to get some short opportunities here. They didn't happen. Then some shorting opportunities here. These happened, but did not complete the journey. I remember analyzing this with you guys. Prices attempted to go down. They didn't get here. Then they rallied and moved all the way up. And what we are seeing is yet another price action price level. So this was the previous high here. Market got to this area, found some resistance, retested, and now we had a reversal pattern with strong evidence of sellers entering the market. And as a result, we have seen these sharp decline in prices, and with it, the Canadian dollar. So I expect this trend to continue. So over the very, very short term, I expect the price to drop to $80.325 per barrel. And if it breaks here, then we consider the price moving further back downwards towards the previous low. So we had seen a very strong confluence level along this area here. So if price was to drop below 80.325, then the next target would be 79.173. So European equity indices are now on track to form another all-time high, and this is for the Euro 50 cash index. So I remember drawing this trend line with you guys, showing you the potential for the market breaking the lower trend line. Now you have seen a recovery, and the market is currently retesting the previous high. So if you breach this area, then there's no telling how far the market is going to go higher. But it seems likely that price might accelerate upwards from here. There's a good chance we'll be seeing a good rally today. And it's the same thing for the French 40 index, which has managed to break above the previous high, is now accelerating even higher. So for the UK 100 index, it's also making a very strong recovery. So yesterday, some good gains were made. Today it seems to be continuing. So from the forward chart, then you can see there's a good chance we will be seeing some more recovery and perhaps the market getting out of this daily range, where this was the resistance and this was the support. But now the market is unable to form the same lows, meaning that buying momentum is increasing. And as a result, we can see that the trend line is now getting steeper, indicating more momentum to the upwards. So from the forward chart, this is how it looks like. So if I zoom out, you'll notice the market is now finding higher lows. And even though we have lower highs, some point, I expect to see the market accelerating towards one trend line more than the other, and it's likely that that acceleration will be on the upper side. So in this case, for the FTSE 100 index, what I'm seeing here is the potential for the market extending the rally and potentially getting to this side of the trend line around 7,689 price level. So as for Bitcoin, I had seen a question asking why the Bitcoin price is accelerating. So we know that the ETF approvals that happened in late December and January led to some weakening of Bitcoin prices. So as a result, we saw this big drop. I'll try to show you this. So investors were betting that the ETFs would be approved, but once they are approved at this price level, what we saw is price moving back downwards, where Bitcoin price dropped by about 21%. So since then, the market has made a pretty strong recovery, and this month we are seeing an acceleration as these ETFs continue scooping up more Bitcoin from the open market and from the miners. So ETFs are buying up to 5 times the amount of Bitcoin that miners are getting from the network, and this is creating even more scarcity. So as a result, we are seeing a continued trend where Bitcoin is pushing higher, and as at right now, we are just a couple of dollars below $52,000 per Bitcoin. So this is expected to accelerate for the better part of the year. And remember, the last all-time high that we saw in Bitcoin was somewhere around 68,576, almost 69,000. And now with this acceleration, there's a good likelihood that we will be seeing a price heading for this previous high. So there is a good chance that this acceleration will continue, and it makes it a very easy position to identify. So for USD against the Swiss franc, there's this pullback happening. So at some point, as I mentioned, I expect the dollar index to start strengthening. So these pullbacks are welcome, and the pullback would drop to 0.88187. So we'll be observing these levels, looking for a continuation on the dollar bets, betting that the dollar will strengthen yet again. So it's the same thing for New Zealand USD. Yes, it has rallied in the last one day, but now you can see weaknesses are starting to form in this chart. And this means that there is a likelihood that at some point, the trend change direction. So even though we have this on the 15-minute chart, at some point, we expect the price to drop back downwards. So all we have to do is be patient and observe for evidence of buyers strengthening the dollar yet again. So that's it for the day. I'll be checking to see if you guys had any questions before I end the session. Hello, Molenga. A good comment from J Squad. Bullish Banter series is a good one coupled with the space on love and losses. So yes, we had a Twitter space yesterday. If you go to my Twitter profile, you might find it, or you go to the FX Pesa profile, you'll find the link to the space. We discussed love and losses. Remember, yesterday was Valentine's Day, so we talked about the emotional aspect of trading and how that can affect your decisions. I think that will be good for everyone listening to this session. Of course, if you've been following Bullish Banter podcast, which is available on all platforms, including Apple Podcasts, Spotify, and FX Pesa YouTube, then you will probably become a better trader, more informed trader, having followed some of the deep research and analysis that we cover each week. Hi, Rufus. JPY has had deflation that persisted for too long, and Bank of Japan has been trying inflation. Similar, China appears to suffer deflation. What tool should central banks employ? So for Bank of Japan, it has been stimulating the economy for years now, I think for decades. Interest rates have remained significantly low as a result of our policy, keep those rates near zero. And as a result, that's why we are seeing Japanese stocks skyrocketing. So in this case, Japan doesn't have the room to hike interest rates, which is what we were expecting this year. You cannot hike interest rates into a recession. So in that case, we expect the JPY to remain weak for the foreseeable period. But then for China, China is having this magical space where, yes, they are experiencing deflation, but the economy is still very strong, despite real estate having tanked in the last 2 years. So China is at the opportune moment of stimulating its economy and basically applying quantitative easing while cutting interest rates. So this could be happening this year within the Chinese economy, which would be quite positive for Chinese equities. So if an economy enters an age of easy money, and the government is just printing money and lowering interest rates, then the usual beneficiary is the stock market in that economy, majorly led by the technology stocks. So, Rufus, what protects pairs such as the cash against the USD from violent volatilities like during high impact news? These currencies for smaller economies, they don't operate on the same standard as the currencies from the bigger economies. So for like the Kenya shilling against the dollar, it's a tricky balance between demand and supply of foreign currency reserves. So the Central Bank of Kenya is always looking for more foreign currencies by encouraging investments in Kenya, by getting those loans from the IMF, World Bank, as well as the Eurobond. And once they get the currency reserves, they're able to balance that with the demand in the country. The demand comes from businesses that are looking for dollars, let's say, to make imports and so on. So once you balance that equation, then the currency is protected. So it's not similar with what happens with the major economies. Higher Rufus, help me raise 20K to buy a laptop, or if you have one that you're not using, please give me. Currently, I don't have an extra laptop that I'm not using. So I don't know how we can help you. Maybe try and join the Telegram group. Maybe there will be someone who is willing to support you. So I have a Telegram group called Tendies. Just head straight to my Twitter profile, and you'll find the link for the Telegram. Thank you for the article on yield inversion on Business Daily. Similarly, US is facing similar challenge, but there is no word of recession. Yeah, what we are seeing with these economies is called can kicking. So a recession is due, but instead of going through it and restructuring your economy so that it may experience growth, they push the recession a little bit further because it can be quite political. So as a result, what you see is the government finding ways, innovative ways of fixing the economy with a bandage or a band-aid, keep it going until the next elections. So the US is doing the same. Joe Biden doesn't want the recession to happen during his tenure because the US is in an election year. So he wants the recession to happen in the next administration. But then it's the same thing in Kenya. We were not able to honor the Eurobond. So as a result, we borrowed more money to repay the previous Eurobond and delay the recession a little bit. But then the fundamentals don't lie. We're already seeing companies firing people in Kenya, and there's quite a number of indicators that are shining red, showing that business is not good within the country. There's a suggestion that you just trade with the phone. Yes, you can also trade from the phone. We have a really good app with trading view like charts, and the app is called Equity Trader, equity with an I. So I'll type this on the comment section, but when you are checking it, you will be able to find the app, and hopefully you'll be able to approach the markets from an informed perspective. So going back to Japan's recession, what does it mean for the Nikkei? So when a currency is weakening, especially for the major economies, investors will find innovative ways of reserving their value. Because the currency is bleeding, people will try to find innovative ways to store value. So in Japan, a lot of people have put out of money in the stock market, and as a result, they have led to the big rally. So in China, when the currency was weakening, people put a lot of money in the real estate sector, and there was a big boom over the last decade in China. So in Kenya, when you want to store value over the next couple of years, knowing that the Kenyan shilling is continuously losing to the dollar, a lot of people put their money in real estate. So that's why we have experienced a big boom in real estate. Everyone is just buying land, not to construct or do anything, but just to store value. And this trend recently shifted to dollars. So we are seeing more and more Kenyans having an appetite for the dollar. The idea is to store value in a period where the currency is weakening. So for today's US data releases, if some of them come back green and others red, what data should we consider as having the bigger impact? It's the retail sales. The retail sales is the bigger indicator, then the manufacturing indices, and then the unemployment claims. So also, after data release, how long do you take to enter a trade? So first things first, you don't have to enter the market. So if there's a big news announcement, you don't have to enter the market. Second thing, if there's a big data release and you don't understand what that data means and how it influences the market, then you still don't have to enter the market. But if you understand what the data means, you understand how it's expected to impact the markets, then in that case, based on your strategy, you might enter retailing the moment you understand what you're trading. So it's more about understanding what this means for the currency or for the asset you are trading before making a trading decision, not just chasing after the volatility. The gold pair, I think gold is responding more to the strength and weakness of the dollar rather than by itself. So in this case, we are tracking the dollar index to see whether it strengthens or weakens. And one of the key fueling data for this week was the CPI and now the retail sales. So we'll be looking towards the retail sales with an angle on whether the data outcome will pressure the Fed to cut interest rates or hold interest rates higher for longer. So if the data indicates that the interest rates might stay higher for longer, and this is in the case of strong retail sales, then that strengthens the dollar against gold. So the contrary is also true. So if retail sales are weakening, then in that case, it will weaken the dollar against gold. So that's the key fuel that we're expecting to be driving the dollar movement today. Do you think the CBK is following the BOJ? No, the two economies have completely different factors impacting them. They have completely different challenges. And I don't think there's anything to compare between Japan and Kenya. So on one side, Japan has an aging population. In Kenya, we have a very young population. So there's so many differences between the two economies. So CBK is just following what it has on its hands and trying to do best by it. Business Daily article, you just search, is Kenya headed into a recession? Business Daily on Google and you'll find it. Silver and gold charts, I'm afraid our time is up. We have already exceeded 40 minutes. Hopefully, we'll get another opportunity at 8 p.m. today. Remember, at 8 p.m. today, we'll be having yet another session discussing the overall outlook of the markets. Make sure that you set a reminder, like this video, and of course, share with your friends as well as other traders. Hopefully, everyone can get to benefit from this. So thank you, everyone, and I hope to see you on the next one. I hope that you enjoyed your Valentine's Day.